Hello, Asbury Research YouTube channel and Substack followers. I'm John Kosar from Asbury Research. I'm here today to announce that we are adding an additional report to our free and paid Substack offering, our unique and exclusive SEAF Model rainbow charts, which track the movement of investor assets as they move around the 11 sectors of the S&P 500 according to our SEAF model. Expanding assets are a primary driver of sustainable uptrends. Your paid Substack subscription will now include 3 SEAF Model rainbow charts every week, in addition to our chart focus report and our sort report. Those last two we'll take a look at right at the end. So we're on the Substack page right now. If you are not a subscriber, you can sign up for the free version here at asburyresearch.substack.com. And that free version will include one SEAF Model rainbow chart update per week. Let's just spend a couple of minutes talking about the SEAF model itself if you're not familiar with it. So the SEAF model, the first version of this was probably 7 or 8 years ago, and we started to measure the velocity of money. We built an algorithm that measures the velocity of money moving around the 11 sector spiders, which together are the S&P 500, in 3 different time frames. We have trading, week, tactical, month, and strategic quarter. The fastest money going in to any particular sector in that time frame is ranked 1. So right now you could see technology is ranked number 1 in trading and also tactical. That means the fastest money going into any one sector in those 2 periods is technology. Strategic is the quarter. It's second for the quarter. So you've got a composite ranking score of 4. That's where the money is going right now in the sector space. On the flip side, you can see healthcare down here is 10, 10, and 10 all the way across. It means it's the second fastest money going out of any particular sector is healthcare, and you get a composite ranking score here of 30. We update this every week on the weekend, so we can actually watch the money moving around. What it's really showing, rather than trying to make a forecast on what earnings might be or what's going to happen with the war in Iran or what's the next quote or, the next tweet coming out of the White House, this is just watching people vote with their wallets. All the collective wisdom of the market, we're measuring it in terms of asset flows. So let's break down the rainbow chart next. So here's the corresponding rainbow chart for the technology sector, since that's the one we focused on because it's ranked number 1 right now. This is a daily chart up top that goes back 1 year. If it's favored, it's in the green. Neutral is yellow, avoid is red, thus the name, rainbow charts. So you can see back here last year from basically May through, let's say, the end of August, technology moved into favored status and stayed there. Look what happened down here. The lower panel is the daily relative performance, corresponding daily relative performance of XLK versus the S&P 500 or SPY. So favored status for an extended period of time, we have relative outperformance. Back here, in January and February, we were down here in a void for most of the time. Look what happened to that relative performance chart. It started to move towards underperformance for tech. Now, ever since the beginning of April, right here, we've jumped back into favored status, and look what's happened to that relative performance chart. So this is a very quick and agile way to determine what the next trend is going to be in the sector space instead of waiting for that trend to kind of evolve on your chart. Again, the importance of relative outperformance, measuring relative performance, is it indicates where the money is going. Where the money is going often indicates the underlying character of the market. When you're in an uptrend, you typically see technology outperform. Probably XLC, communication services, XLY, which is consumer discretionary, and you might see staples underperforming. You might see healthcare underperforming. That's generally where we are right now. if that turns, the next time that turns and you see the defensive stocks starting to bubble up to the top of the SEAF model, it tells you, even though you might not yet see it in the S&P 500 chart, that the internal character of the market is changing towards one of defense. This is why these are so important, not only as a trading vehicle for us, an investment vehicle, but also to help us to understand what's going on in the market. The next thing I want to show you is that we have a YouTube channel. It's Asbury Research's YouTube channel, and it's free to subscribe, of course. But if you scroll down, you can see that we have free videos down here. These are beyond the SEAF model videos. These break down the SEAF model into a lot more detail. So these free videos that you're going to find here are anywhere between 7 and 12 business days old. The latest videos, which are produced every week on Monday, are available as a part of our premium research subscription, which is not where we're going on this video. But once these videos become a little bit older, a little bit dated, all of our paying customers have seen them for the premium service, we bring them down here. So this is just another free learning opportunity for you to understand our unique way to look at markets. Finally, let's go to the Substack page, asburyresearch.substack.com. If you haven't signed up for free, do so. It's a no-brainer. There's a lot of information here that can help you become more familiar with what we're doing. So in addition to the charts, rainbow charts, which we were talking about, there's two other parts of this. There's chart focus. This is once a week. And this looks at the 10 charts that we think are the most important to pay attention, that two that have the most, that we believe is going to have the most influence on future broad market price direction. You can see it includes a lot of charts, a lot of graphs. And the second one is our sort report. Sort report twice a week for the Substack subscription. And what it does, it looks at a broad swath of different types of assets. Small cap, U.S. technology, crypto, commodities, gold, U.S. dollar, U.S. interest rates, and more. And it measures them according to three different metrics. Positive trend is going to show green. Positive relative performance, either versus the S&P or versus whatever its parent might be, is the second one. And the third is money flows. Is the AUM in that ETF, the assets in that ETF, are they expanding? Right now, there are three: U.S. small cap, U.S. technology, and also emerging markets. This tells you where to look. If you're looking for value, if you're looking for opportunity, this is a quantitative scan that we do twice a week to tell you what's performing, where to look for opportunities. So thanks for watching. If you haven't done so already, don't forget to sign up for the free version of the Asbury Research Substack newsletter, which you can do again right here at asburyresearch.substack.com.